Joining me now is T-Mobile CEO Mike Seaver. Mike, I've talked to you from a kitchen table in the middle of a pandemic, a couple weeks ago in a hotel room, and finally in person.
Well, thanks for coming all the way out to San Francisco, Saz. You look like New York, though.
Well, I look great. It's good. It was the suit, right? So talk to us about, Shauna just mentioned on the other side, about the new dividend, about the new stock buyback. What's your message to investors having pulled the trigger on both those things?
I think what investors expect from us is ongoing, reliable growth, profitable growth that translates into industry-leading cash flow growth. And that's what we deliver. And we've been delivering it consistently over time, such that we believe it's time to make the next installment of our long-standing aspirations around shareholder remuneration. And in 2021, we laid out an aspiration that was big and bold, that we saw up to $60 billion in shareholder returns during our planning horizon. And this is the second installment, $19 billion over the next 5 quarters. And as a part of that, our first ever dividend, a $3 billion annual dividend. That's $3.75 billion over the 5 quarters that we see increasing at about 10% a year within our much larger cash flow envelope of outlooking something like $16 to $18 billion next year.
Don't run off the set when I ask you this. Don't pull off the mic, because when I think telecom, dividend payer, I'm thinking potentially slower growth. Do you see, is T-Mobile now a stodgy telecom company? Because I think a lot of investors on our platform only know you for strong earnings growth.
Far from pulling off the microphone, that's a really important question. And look, we are outperforming this whole sector on growth, and our capital priorities have not changed. It is to fund this historically great business plan, and both organic, inorganic, core business, as well as adjacencies. Secondly, to get our business on the stable footing of a leverage around 2.5 times. About mid-twos has been our long-term leverage aspiration. And we're going to move there next year because of the wider rate environment. We think it's smart to move there a little faster than planned. And third, to return all that massive cash production to shareholders. And it's time for us to start doing that in a more evergreen, reliable format, because those cash flows are now evergreen and reliable. And it's a big moment for our company.
So T-Mobile, still a double-digit earnings grower.
Well, listen, last quarter, to put it concisely, was the biggest postpaid net addition quarter in 8 years and tied for the biggest in our history for a Q2. That's huge. And we translated that into industry-leading service revenue growth at the consolidated level, as well as postpaid wireless, the stock you buy and the place where all the value is created. And we translated that into double-digit EBITDA growth, highest in the industry, and then translated that into the highest cash production in the industry, not just in terms of overall growth, outlooking 75% year-over-year free cash flow growth this year, but in terms of cash production per revenue dollar. We'll be north of 20% cash flow margins as a percentage of service revenue this year, best in the industry by far, and only going in one direction.
Fair enough. Are there cost savings left from the Sprint acquisition?
Yes, we're at a run rate synergy of around $7 billion out of $7.5 billion. We see a little bit more room to clean that up. But really, from here, it's about executing our business plan. And after 3.5 years of integrating our business, we have a fantastic company that's really performing, but we have to make sure that we're our best version of ourselves. And we've been making changes to make sure that we're not just successful this year, we're successful 3 years from now. Some of those changes are a little difficult. We had to execute a reduction in force this month, but that's to make sure that our company is super successful 3 years from now, and that we're able to be the best version of ourselves, fast and nimble, competitive, entrepreneurial, the kinds of cultural traits that created this success in the first place.
Investors that have jumped aboard the T-Mobile growth story all these years under John Legere, now you, of course, the CEO, John, of course, the former CEO, they're not used to seeing layoffs, Mike. I think this is something that came as a surprise to a lot of investors.
Yeah.
Did you feel pressure to do it, and are you done doing
Well,
it?
it wasn't a decision we took lightly, because this is not a normal thing for a company like ours. We wanted to do it in such a way that it really was about the people who are staying, which are the vast majority of employees. Every employee deserves to know that they are working on something important, that their role's not duplicative, that they work within a management structure that's fast, efficient, and decisive, allows them to get their work done so that we can really execute in what is a really competitive environment. And that means being very efficient. So yeah, we told employees in my letter to them, we were doing this now, and we want every employee that's staying, which is the vast majority, to know that this is going to be a better place to work and that there isn't another shoe to fall.
You mentioned competition. We have heard recently, the past few weeks, more price competition from the cell phone carriers. Are we going back to new price wars, or is that just a thing of the past?
No, it's just that the nature of the competition keeps changing. Now, we did bring extra competition, just like we promised we would when we created this merger, and it's more competitive now than it was a few quarters ago, mostly due to the dynamics of our merger. But the nature of it is what's changing. Right now, customers want a fantastic deal on a smartphone. Those smartphones have gotten a lot more expensive, and they're now relying on the carriers to help them afford those. And so that's where the nature of a lot of the competition has gone. But on the other hand, they're willing to pay up on the rate plan side to get some of those smartphone subsidy benefits. And so, the nature of it keeps changing. What makes us distinguished is we're guided by customers. We just keep listening to customers and changing how we execute so that we're always able to deliver an overall better value. Because ultimately, post-merger, what customers expect from us is the best network, backed by the best 5G and the best asset portfolio, and the best value, backed by the best balance sheet. And we're the only ones that can give them both.
Is there any cell phone bill relief coming at all at any point, or do you just have unlimited pricing power because we need our phone? I'm not getting rid of my phone.
Well, quite to the contrary. This has been a massively deflationary market over the years. What customers get for what they pay now is better than ever. And wireless has been one of those sectors that has been contra to the inflationary trend where a per unit pricing against consumption in wireless is the best now that it's ever been. And by the way, we spend tens of billions of dollars to build these historically great networks, and yet translate that with a better value over time to customers and still deliver cash flow aspirations in line with our expectations. So, we have to thread the needle against all these stakeholders, and so far it's working beautifully.
Last 15 seconds, you excited about the new iPhone?
Absolutely. We always are this time of year. Can't wait to see what they come out with.
All right, yeah, me too. I'm about due for a new iPhone. Mike Seaver, T-Mobile CEO, thanks for making time for us. It's a very busy conference. It's lunchtime. Let's go eat some food.
Yeah, glad you guys are here, Saj.
All right, appreciate it.